Check, check, quick sound check. Can everyone hear us loud and clear? Let's do a quick sound check. Coach, how you doing today?
Good, Coach Jay. Last day of the month, last day of the quarter.
Yes, sir.
And you could see it in the movement. So, how are you doing, Coach Jay?
Doing good, doing good. Not feeling too great. Got a headache, maybe from staring at the screens a little bit too long, but uh green on the day, so I'll take that. Did take some Advil before we got on here, so that should kick in just a minute here, but feeling all right. Welcome everyone to At the Buzzer, our market recap. If this is your first time here, I am Coach Jay, that is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. This is our first time meeting. I am Coach Jay. I've been a Topstep Performance Coach for a little over a year, been trading for 11 years and in the futures markets for the last 5. And that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep for about 16 months now as a performance coach, and I've been involved in the futures industry for 4 decades. Um, I've got a lot of experience trading, and I hope with this segment to bring some experience to help you as a trader improve and make money. It's the bottom line.
That is the goal at the end of the day, is to put money in our pockets. Coach, you mentioned it is the end of a quarter, beginning of a quarter. We are moving into Q4. We did have some news out on the calendar today, not too much as far as planned news goes. We had, the Chicago PMI came in pretty much as expected. We did have comments from Powell as well today that caused some volatility. But not too much as far as planned news go. In Powell's speech, he did mention a bit of a change from what I've heard him say in the about the labor market, where prior comments he's said that the labor market is very strong. Today, I heard him say for the first time the labor market is strong, but it definitely is cooling, which I think we've seen in some of the numbers. And if you just ask anyone about the labor market themselves, if they're looking for employment or whatever, that there is a little bit of cooling in the labor market for sure.
Coach, that brings an old saying, difference between a recession and a depression.
hmm
A recession is when your neighbor loses their job. A depression is when you lose your job.
Hmm.
So if you've ever been unemployed for any period of time, you know that pressure. I think that was defined as what's going on. It's if you lose your job right now, it's not like you jump right back into another job. I feel it's from the people I know that are going through it.
Gotcha. And we are seeing that. I've never heard that quote before. When you lose,
Yeah,
I've never heard that before, but it makes a lot of sense, right? When it hits home, it's a lot different. Um,
yeah.
as far as other news goes, we are seeing news of some escalations in the Middle East. There's talk about a strike with rail operators in the U.S., which can have a ton of implications as well. Dakota went into it. I'm not even going to pretend to, but Dakota, the supply chain expert, spoke about it on Fast Markets this morning. So if you do want to hear, Dakota's take on it, I would suggest rewatching that segment. Anything you have on that, Coach?
Nothing. I've worked on some of the supply chain. I used to sell, move steel for a steel trading company, and any kind of strike on the rails right now would be a major concern.
Right. I
If you've
might
ever
have that wrong. Was it rails? Hopefully, I don't have
was
that
a
wrong.
rail, I don't
I'm
know.
yeah.
Um, and I try not to know. As I just trade the market and trade the result of the news on the market. Um, when I have an opinion, I
Got it.
usually hold on to trades too long.
My bad. It wasn't
So,
rails. It was longshoremen. Um,
uh,
there we go. So sorry about that, and thank you for chat for correcting me. I don't always get it right, but
it's
yeah,
always an interesting word, a longshoreman. Is there a short shoreman? And I'm being serious. What is the definition? Like longshoreman. And it's something that it's extremely important. Um, any imports come through. Most imports come through
Ports.
ports.
Right.
But my personal approach is until that happens, I'll see how the market reacts and make decisions there. It's good to know that's in the horizon, but
Hmm.
I can't make a trading decision based upon it.
Correct. Yeah, I would agree with you there. All right, let's look at the top percentage movers for the day. There are about 30 different markets that we can trade with Top Step accounts. Uh, and to the downside, we have copper down 1.11%, silver down 1.23%, and platinum, our biggest percentage mover to the downside, down 3.06%. To the upside, we have corn up 1.44%, the Nikkei up 1.86%, and soybean oil up 2.24% for our biggest percentage mover to the upside. For the four major markets that we trade with Topstep, we have the S&Ps up 0.32%, crude oil up 0.23%, the Nasdaq up 0.16%, and gold down 0.52% for rounding out our big four. I saw a question from Joe. Did we have a session on Friday? We had some technical issues on Friday. Coach Paul and I were both excited for Friday because it was a great trading session to want to talk about, but the internet gremlins didn't want us to give out that information. So we will just continue with it from here. Coach, I'm going to go to a 30-minute chart on the NASDAQ. And on Friday, we closed below. That was Friday, right? We did close below that 200 moving average on the 30-minute for the first time in a long time.
Yeah, that the close after a big break just felt that the Nasdaq is getting tired. And we missed Friday was to say one of the things we want to discuss was the end of today. That Monday would be the end of the month. To beware of that and look for what eventually did happen. I feel like a Monday morning quarterback now, but we were that was on the agenda. Knowing and not only end of the month, end of the quarter, not surprising action. Um, well, I saw that I got flat and I really didn't trade the Nasdaq today. I will be looking at it as a buy now that we're over it again,
Okay.
um, and a place that I personally can lean with a relatively small amount of risk for a bigger reward. It looks like that with that close, we gained the momentum to the upside. Um, and what's my downside? Two ATRs or less. So, um, and that all came in the last hour.
Yeah, it did.
We went from lows of the days to highs of the days last hour. Mark your calendars. It isn't just the end of the month, it's the end of the quarter. Why is that important? Well, large funds get paid on their quarterly performance. So they have to book some profits to get paid.
Makes
They
sense.
can't have open trade equity. As day traders, you don't have to worry about that. But as a fund manager, that's a really important thing. If it's on the books, you don't get paid. If it's closed as a profit and you can get paid and then get back in. So quarter end of the quarters, you can see this whipsaw action. And mark that anytime at the end of the quarter, it's really important to
Yep.
the funds. They have big money. They can make some, just as us as day traders, they can make some big waves.
Right. Absolutely.
Or
Nick
bad
Forte.
mistakes, I should say.
And if you're not aware of it, when that end of the quarter is going to be, make sure you tune into the market kickoff every Sunday because Nick Fortick was talking about it all yesterday and then again on Topstep TV this morning. That the end of the quarter could bring some interesting price action, right? And that's kind of what we got today. That 200 moving average on the 30-minute was somewhat of a resistance until it wasn't. Like you said, Coach, in that last hour, we kind of spiked above and closed above it for a pretty strong close. So I'll be looking at those prices going into tomorrow. But if we go down to a shorter time frame, if I'm looking at a
3 minute.
3-minute chart, here is the New York session open with a VWAP anchored to it, and there you go. At
That
some point,
never.
that VWAP settled at exactly 50% of the opening range and kind of just stayed there. We've talked about this
Wow.
pattern before, but perfect uh, signal of a range bound market, and fading the extremes of this were where your opportunities were. This obviously, this spike down here was during Powell's speech in his questionnaire. We pushed down into a major level, 20,050. Uh, don't hit 20,050 with all of this selling. These sellers were not convinced enough to trade 20,050, and we bounced right back up. So a couple of different
Coach,
patterns that go ahead.
did we get a J trade down there at the lows?
We did. We did. And what coach is referring to is high volume here. And you can kind of choose any candle. I would choose the one that either highest volume or the candle that tested 20,050 and didn't trade it. It looks like a 3 bar reversal, but basically what we're getting at is high volume. We get a candle close above that volume and then trade in the opposite direction. Right now, depending on the time frame that you look at, these high volume candles are going to be different. So what I like to look at times is where did that volume start, right? So at the end of this move, we did get, some pretty high volume and a turnaround. You can preempt the trade and take it down here. But if we look at where that volume came in initially, which is the highest right here, right? That's our highest volume candle, and it kind of started the move. When we get the close above that, that's even more confirmation that if you're looking for shorts, anyone who shorted this and started this move is definitely underwater at this point, right? We get a candle close, uh, and this is pretty late at this point. Um, but to me, this is the higher confirmation. Down here, we absolutely got it as well. But if you look at where this candle closed above this high volume, it's a lot higher. Unless you were referring to this one, Coach.
Oh, the
All
three
of them.
bar reversal
Yep.
and both. And yeah, but one other great thing about if I'm short and I see that,
Hmm.
I'm getting out.
Yep.
Just that again, when it gets above that first buying candle, after the lows, because that I think that it made the lows, and it was all. But it's funny, it was all about the same volume, which
Hmm.
was rare. It wasn't a spike, but the buying weak buyers or trend in it's a counter trend in the 3 minute
Right.
shouldn't be able to hold.
Correct.
So at the least it's a good short cover. I like that. It like if you were aiming for something else, but it could be a sign to go, okay, um, buyers
Maybe.
came in and they could, and they're not being shook out. it's
Correct.
I put it. I knew that from the trading pit. What I was saying, there was probably a roar as you're making lows, and all of a sudden it gets real quiet.
Hmm.
And it's just eerie. Here, it's this kind of the same thing, and prices it just stopped moving lower. It's a point where okay,
Right. What
that's
are we going to do
done.
here? Is there another seller or are we done? And like we say all the time, right? Sellers have to become buyers when the market stops doing what they expected to, and vice versa, right? Buyers become sellers when the market stops moving in their direction. So that's kind of what we
Eh,
got here, right? This looked like at a point we could have, pushed down and tested 20,000 evens. Um, but when that price action stops, go ahead, coach.
Was that a double bottom?
Uh, If we zoom out, not really. No, I mean, yeah.
Okay.
If we zoom out
I thought I
to,
saw
r-
no, I thought I saw another one on that move,
got you.
but it was an illusion.
Yeah. If we zoom out, there is, but coming down here with this amount of sell pressure, and again, this is a 150 point move in 12 minutes. Uh, this we talked about, sustainability of volume. These are the four highest volume candles that we see consecutively outside of the session open. The likelihood that that volume sustains for an extended period of time is pretty low, in my opinion, right? So we are going to see some drop off, and then when it does turn, uh, what is the likelihood that we see sellers come back in? Obviously, we see it here. Volume didn't go with this move; it was just kind of a quick spike reaction to Powell, and we pop right back up, and back above all of this selling that came in to close the session. So obviously, short covering, and then you're going to get some new, shorter time frame buyers in this move as well to kind of push us up to the upside. Really nice move. I did take some Nasdaq trades today. Most of my trades were in the Russell. Uh, I just had the chart up and it looked like a better setup. But the Nasdaq did present opportunities on both sides. Was there a setup to catch the drop? So to catch this initial short, was there a setup for it? Let's see. Let's see. I'm gonna put what's on my charts daily on here. So VWAP should be somewhere on there. It's that green line there. Uh, to catch this short, Joe, we have this push up here. And again, we don't get to see the markets this way. We see it like this. This I'm reading as, a push up into 20,200, which is also 50% of the opening range. I don't know that I would take this trade though. I don't know that I would take this short personally. Because it's right at VWAP, and with range bound market, I don't want my entries to be at VWAP because if I took a short here, right? Entry at VWAP, we bounce the other way. But once the market starts to sell and maybe breaks out of that opening range, jumping on and taking it there. But that's a tough one to take. That's a tough one to take. If you took it, your risk, would have to be on the other side of the opening range. But we see how many times that trade got stopped out. So probability wise, I personally wouldn't take that one.
Um, yeah, that's it. It was heck. It was tough. It's a tough trade today.
Mhm.
By the way, all days are tough because we're dealing right. We're always
Right.
dealing with uncertainty. But
Absolutely.
if you enter that, you could have done the same thing earlier and limited your loss when it first broke out. If it gets back in, I'm out um, into the opening range based on this. You could have sold against VWAP. I mean, and look for a close or a
Mhm.
new high. But measuring the risk to take that trade is the important part. I personally was not looking to sell today at all. I just really, but whatever it is, developing your trading plan, your trading style, um, is important. And once you want to develop that, the most important part of on the hierarchy of decision making is what can I afford to lose when I make this trade? So I thought trading, if you wanted to sell it, trading against VWAP, selling against VWAP, you could have
Mhm.
sold it two or three times, had small losses,
And then hit the
and
one.
hit the one.
Right.
But if you noticed, that's why it came back so quick. there was
Yeah.
there wasn't great volume today until the close. On my other platform on CQG, this was the highest volume in the last on a half hour in the last 3 days.
Oh
Was
wow.
the last half an hour.
Not a
So
coincidence that it's the end of the quarter.
it's not a coincidence. Um, but going back to that, yeah, there was some trades, and you have to define it. And there's many different ways to skin this game.
Yep.
Um, Key is, can you afford the risk? I surely would not, if I sold it in all, which I don't like to. I need to when I see something like what I call Jay's candle or a 3-bar reversal, get out fast, take a quick loss.
Yeah, I agree. Agreed. So we're back above that 200 moving average on the 30-minute. This was a very strong close. Going into the close, Hogue is going to mention this as well, but these candles here, this range, calling the high of it 20,286, all the way down to 20,230-ish. I'm going to be looking at that range in the overnight potentially to hold and maybe get a continuation of this move to the upside. But of course, anything can and will happen in these markets. So want to be aware of that as well. But a lot of times when we see that late spike into the close, there is somewhat of a continuation of it. All right. Anything else on the
Can we
Nasdaq,
look at
Coach?
the daily?
Yeah, let's look at it.
Yes.
All right. Here's your daily.
So we're above the 20 and 50 and the 200. Um, Today we challenged it a bit. Um, Boy, that's a pretty. It's not bearish,
No.
but if buyers start coming back in, I could see this running the new highs this week. Um, um, Also, beginning of the month and quarter is tomorrow. You can see fresh buying,
Hmm.
but there's nothing bearish in this chart. Uh,
Nope.
so I'm still favoring buys.
Same here.
Um, and if it breaks hard, I'll lose well.
We are about 4.5% off, little more than 4.5% off the all-time highs. All-time high with the rollover adjustment is at 21,214 half, uh, somewhere around there. So not too far off. 4%. That could happen in 4 days. That could happen in a day. Depends on who the Nasdaq feels like when it wakes up tomorrow. Uh,
I've never felt. I've never heard that.
uh, let's go to the S&Ps that
Oh,
look
I like to be more bullish.
like yeah. So all-time highs in the S&Ps are at, let's see what the high of this candle, 58.30. We closed today at 58.11. The S&Ps are a lot more bullish than the Nasdaq, like Coach said. Does look a little stronger. The Nasdaq has some room to catch up, which is a good thing if you're a buyer in the Nasdaq. If it does play catch up, because it has a little bit more room to run. Let's go down to a shorter time frame, 30-minute chart. Looking at the moving averages, again, we closed under the 200 on Friday, and back above it, pretty strong 30-minute candles, back above that 200 today, and looks like it just wants to continue this run to the upside. We'll go down to a shorter time frame, 3-minute chart, and pretty much the same chart as the Nasdaq. The range that I would be looking at here to close.
Sorry, Jay's
Go
candle is even more defined there.
this one here.
Oh, that's yeah.
Yep. Uh, 5,800 up to 58.18. As long as this range kind of holds, I would be looking to the long side. And if it breaks, then uh, maybe looking for a better place to buy. And this is
Oh,
the candle you're talking about here, Coach. Yeah, this is a even better one because this one actually gave you an opportunity for this retest,
yeah, it
right?
did.
Where it closed above, came back down, and said, "Hey, are you sure? You sure you don't want to sell it anymore?" And they said, "Nope, we're good," and just left from there. Very similar candle here. Uh, Pretty high volume. This is right into power hour. Candle closed lower than it opened. But if we look at the range for that candle, again, a close outside of it gives you your opportunity. And these trades take some patience, right? Where you look at it and now this is asking you to wait 15 minutes before a confirmation and then taking the signal from there. But it presents such a good trade. Go ahead, coach.
15 minutes of patience. Just it struck me as funny. That it why I do it because I've been there. 15 minutes when you're in a wrong position can feel like a month, right?
Right.
But if you measure out your risk and you can afford to take that trade, that's a relative. It becomes a relative statement. It's like, okay, if like I've said this before, comfortable in a trade means you put it on, put a stop, and you could leave and come back to see if that worked. And
Right.
that's the ultimate patience. Oh, we forgot about that. Anchoring it to the bottom.
Yeah, that's what Philip just said in the chat. Anchor in the bottom, looking at where it bounced. Let me take some of the stuff off so we can actually see what's going on here. But shout out to Philip in the chat saying anchoring a view up to that, and I keep anchoring to volume, anchoring it to that low. Once we make the low, and how do you know it's the low? You don't wait till it turns. You get the candle close above, then you can start to anchor. One bounce, two bounce, three bounces.
Heck, you could
Real
just keep anchoring it all the way up.
right. Right. But really nice strength into the close there. Um, but prior to
Here's
that,
another thing.
go ahead, coach.
If you sold that low, I mean, one of the things where just let's just say you sold that low and you put a VWAP there, you've got a lot of information right in front of you.
Absolutely.
This is if you took a lot of risk or you didn't, you just sold it and went, oh, and it start. What number one, it stopped making lows. You had buying come in that took out the last two candles. You got a 3-bar reversal. Now, if I put that VWAP, now it's being bought,
Right.
right?
Right.
Off those lows. It's relative statement saying, okay, well, let it close under a VWAP and I'll get back in, or I just got to get out and take this loss here. And this is the important part, is if you follow rules, you need to take a measured loss
Hmm.
because it's unnatural to just take a loser naturally. Like, okay, so when looking at both sides of the market, if you sold at lows, you're going to start immediately feeling some heat.
Yeah. Almost immediately.
Um, this can help you to just go, okay, where am I? Where am I? Okay, we're above VWAP. There's a 3-bar reversal. I just got to get out here. Now, in if you're inexperienced, this may sound like hindsight trading.
Right.
And I'm bringing that up is to give you some perspective. I know when I lost accounts and when I was losing, I'd be caught in the hole, and I would just, as humans can tend to freeze up. If you've ever been in that situation, if you get some kind of visual like that, just put a VWAP on that low and go. To me, it helps define like I'm fucked here. I'm,
Pretty
I
much.
just gotta, take a good loss, go up, um, and maybe you don't want to buy it. You could change your mind as one a few times as day trading, where you get it. Okay, maybe I can buy it, but it gives you perspective of what the market's doing versus what you want it to do, and that is the enigma of trading.
For sure. And you might even ask, right, where is the low? How do you know it's the low? We talked about seeing the reversal pattern, but let's see we see the charts this way. The market starts to sell off. Anchor a view up there. We're still below it. Is this candle
Anchor
the
it
low?
again.
We're still below it. What about that? I mean, and I would not suggest to do this because you can just wait and see which candle is the low, but we're still below it. Now, what happens? We close above all three of those anchors, right?
Oh
That's a
wow.
it's a clear signal that we're turning. I don't know that I would continue to anchor that way, but it's clear.
Hmm.
The one other thing, coach, is we talked about selling in the hole. We talked about this a little bit last week as well. But if let's say you didn't have the trade plan because I mean, I'm going to be honest, outside of that move and the recovery from it, the S&Ps were to me personally and even, more consolidated market, and I wouldn't look at it to trade today, right? Where this range is really tight, where we have this VWAP kind of splitting the range in half. And I'm looking at this as other markets are presenting better opportunities. But with this VWAP being this flat, I maybe not have taken this short. But if I'm shorting down here, we talked about this last week. Hopefully, some of you in chat remember, how far are we away from VWAP if I'm shorting right here? Coach, we talked about, measuring how many ATRs I'm away from VWAP. VWAP's up
Yep.
here at 57.88. If I'm shorting at 57.60, I am on a 3-minute chart, eight ATRs away from volume. At that point, you're kind of late to the move.
Also, if you were short off a VWAP and you got 8 ATRs,
You did your
you
job.
better watch out for a turnaround too. All right.
Yes.
I mean, you could stay short, but then that reversal gives you a good reason. Like, I don't know anyone who's sold the high of the day and bought the high of the day ever in 40 years,
Yeah.
right? So remember, it's all relative. Um, so it was a great trade on the sell there. If for whatever reason you got a chunk of it, and this is a good, you said 8 average true ranges, ATRs. And remember, the ATR is relative to the time period you're trading. In this case, it's the 3-minute. It would be different on the half an hour. But if you made that decision based on a 3-minute, 8 ATRs is like, if we risk 2, like I like to, that's a 4-to-1 in
Right.
half an hour. That doesn't, that, that's not bad for day trading. That's a great
Right.
move.
Yeah. And are there going to be some days where this just continues to run and you get a 20 ATR move? Yes, but we know that those are outlier days, right? That's leading to a 2% down day on the S&Ps. We don't see that often, right? So the likelihood that you're getting eight ATRs in that short of a time frame and seeing continuation of that move may be low probability. So really nice bounce in the opposite direction. Anything else on the equities, Coach?
I'm good.
All right, let's move on. Got some questions in the chat here. Is there a reason why 2024 price action is so bad? That's from Richard Harris. What would you say to that, Coach?
I think that's relative statement. Well, let's put the daily up there or a weekly. There's been some movement. We made all-time highs.
Yeah, I
It's
don't know that I would.
January.
I don't know that I would call it personally bad price action either. Have there
Well,
been some difficult days to trade? I think so, but that's every year for me personally.
yeah. If you and like I might just putting that price action. There's been some great trading days. Um, so it's a great question actually, but without the fucking, it's relative. The relative to your expectations.
Hmm.
There's been some hard day trading days, but
Yeah,
coming into it today with the expectation and knowing that's why have an idea. Like I said, I don't follow the news closely, but I know there's news events. I need to make that clear. But in this case, it's the end of the month, end of the quarter. Okay. Why is that important? Well, we talked about it earlier in the show. Uh, Positions, big funds want to liquidate to get paid. Um, there's P&L. There's all sorts of confluences at the end of the month and especially at the end of the quarter. With that, knowing that you're going to get a high probability of some funky trades like today. This was not easy. I took one trade, lost a little bit of money in the equities. I lost more money in the currencies and made some in the corn. But that's for me. But here, once I'm going into the day, yeah, it's a tough day. Um, Tough day 4, follow through. Maybe that defines it. But I know some people had great years, so
Yep. Yeah, all relative. And if the market that you're trading is tough, maybe there are some easier opportunities in a market that you have not traded. Richard, I saw you in the YouTube chat earlier talking to someone about the Russell and the Dow. Maybe those are presenting some better opportunities for you. So, uh, you know, find the market, find the setup that you're looking for. And I think as far as the day trade goes, we should be able to find some type of opportunity day to day. And if you don't, not trading is an option as well. Let's move over to gold. And David B asked, "Do I trade platinum?" I have. I will look at it. I was actually looking at a platinum short last night, and I didn't take it. Uh, but it presented a really nice opportunity. Actually, let's just go to platinum real quick, and then we'll go to gold from there. But why was I looking at a platinum short? We have, where is it? You guys can see it. We've done this. We did this pretty much all last week, showing this pattern. But here is the Globex Open for platinum, and there you go. Uh, there's the short. There's the Globex Open. What I'm looking at is Globex Open, and then VWAP attached to it. VWAP left the range really early. There was a couple of examples of this exact trade in a few different markets. I know uh, Discord user Big Sexy showed me one in the Nikkei that he took, which was again a really nice trade. So platinum is not
in the
as
Nikkei.
yeah, in the Nikkei there was one as well.
Wow.
Bradley DC says platinum seems dangerous, very expensive. It's actually the exact opposite. I think the platinum market is a much safer market to trade than gold. Personally, what do you think, Coach?
Well, you hit it on. It's once again relative.
Mhm.
Let's look at the average true range on the daily,
All right, ATR on the daily
and then we can see
for
on both gold and the platinum.
platinum is 25 points. Let me pull up my futures calculator. Where is it?
25 points.
Hmm.
That's $1,250.
All right, and
Average daily range.
gold is 33 points, $3,300.
It's 30, 1200, 3,300. Yeah, it's almost 2.5 times average range of risk.
Yep,
Now, with that said, platinum does not trend like gold.
correct.
That part can make it very tough because there's days you could get chopped to death in platinum while gold is moving along. But if you, I mean, it's less risky to trade.
Yeah, absolutely. If we look at platinum, by the time we got to the New York session, it was pretty much range bound market. A lot of the opportunity happened overnight. There's a question from Rob Walsh. How did we figure out those daily prices? So what Coach Paul just did, right? What's the daily ATR for a specific market? So I have the ATR indicator. I'm going to go to a 1 day chart, and you see this value down here is showing 25 points. So what coach is doing is 25 times the dollar amount per point in platinum, and that gives you around 1,200 bucks. And then the same thing for gold. 33 is the daily ATR. You multiply that by the dollar amount per point, and that gives you the dollar wise range on average for each market.
And remember, it's that multiplier for gold. It's $100 a dollar move. For
Mhm.
platinum, it's 50.
Right.
It's a good
Uh,
question.
I had a futures calculator somewhere. Yeah, here it is. I'm gonna put it in the chat. It usually comes out as like the longest link ever. But there you go. If you want to know the tick values for whatever market that you're trading, check out that calculator I just put in the chat. You can type in levels, pick the market, and it'll tell you dollar wise what the risk is. But let's talk about gold a little bit here. Gold, we saw making new all-time highs last week, and we talked about this pattern that gold likes to do: make a new all-time high and then sell off. Here it is again: make new all-time highs, sell off for 2 days, and continue. make a new all-time high, sell off for 2 days, and continue. Uh, Here's the same pattern. We make a new all-time high, we sell off for 2 days. Does this move continue? Of course, patterns are patterns until they break. So we don't know, but that's kind of what gold has been showing. We are getting somewhat extended, coach, from these daily moving averages. The
Hmm.
20 moving average is at 2,600 even pretty much, but still very much in this strong uptrend. And if I go down to a 30, on the 30-minute, we're below the 200 moving average for the first time in 2 weeks.
Yeah, and that's now with that said, and it's flattening out too. Um,
Yep.
so right here, I'm not looking. It has to be above that 200 moving average for me on a half an hour
Mhm.
before I start dipping my toe in there. It could make it a break to the 20-day moving average on the daily, when we've seen that hold many times, which would be a healthy correction.
Yeah.
It wouldn't be, but I mean that for long. It wouldn't. So that it's moving at a pretty good clip. The 20-day moving average,
Mhm.
it's going up. I mean, that might seem like it's a. Where is it?
2,600, 2,602. So just about 50 points away. It's not a lot.
$50 away. We could see a break like that tomorrow. You just don't
It's
know.
2%.
It's 2%. We
Could happen
hold
tonight.
that, then we get above the half hour moving average, and that's where I'd look. That's what I would say a great correction. Um, right here, because it took a pretty good hit today.
It did.
Um,
It did. But on
Never,
a
you know what? It never even came close to even attempting to go after that all-time high today. Really got under yesterday's low, gained momentum. So just looking at that chart in gold, I can see some continuation to the downside. Um, Always look at both sides of the market. If you were long this, you'd be like, okay, well, on a position, okay, it went down. It's done this before, so it's pretty solid. If on a day trade, if you were trying to buy it, might have get nicked. Um, but still healthy upside overall.
Yeah.
Um,
What I'm looking at in gold right now looks a lot like this here. So when we made this is back in April when we traded above this 2,500 here, right? So we were trading here, and obviously this is I'm pretty sure these are adjusted prices, so it wasn't 2,500, but we make this what is an all-time high at the time, and we're extended from that 20-day moving average. We get a pullback to it, kind of consolidate before we continue. That's a lot like what this looks like right now, right? We made it high at 2,700. We're extended from that 20 moving average. Could it just keep going? It could, but this pattern looks very similar. So I wouldn't be surprised at somewhat of a pullback. And we're not asking for a whole lot, right? It's 50 points.
yeah, $50.
So it
What's
could happen. It could
$50 in
happen in the
gold anymore?
right. It could happen in the Asian session overnight, and then we'd be back to all-time highs tomorrow morning. Um, let's see what it provided
Not
for a
probable, but possible.
but possible. Let's see what it provided for a day trade today. We'll go to the first 30-minute candle for the Globex Open. That is this one. Let me make sure I pick the right one. It's this one right here. And then there's a question: do you see any good setups leading into overnight, or should you wait to see what happens with price action as it opens? Um, Sean, I think you were asking that question when we were going over the equities, but personally, I like to wait. I have an idea of levels, but I want to see what that overnight open kind of looks like. What about you, Coach?
Yeah, I look at the first half an hour, frame it out like we do, like here, and like okay, let's look at my this first half an hour. It's got to get going um,
Hmm.
to be a buy. I just in my gut. But the first half an hour, just like that. If we go back, coach, and don't even show the results, Okay, use this. First half an hour, frame it out. All right, where's VWAP in relation to? It's still in the range we broke out on a price, but not VWAP. And I'm bullish. If I buy it there, and I would say that's an aggressive buy.
Hmm.
Oh, there, buy it here in this area right there. What's my risk? New lows
Yeah,
or a close below VWAP on the half hour.
makes sense. And that like you said, it's an aggressive entry, and it is a trade that can work out because that VWAP can catch up and just push out of the range. But you're not going to go into this saying, you know, just no stop loss on this trade. It should go because you didn't get that added confirmation of volume moving with it.
Coach, I would add to that. Um, the the trades you take without a stop are zero.
Yeah,
And
right.
because we talk, the 7 principles of good traders is accepting the risk. If you don't put a stop in, it's on some level you're not accepting the risk. You
No.
might, I, and it's from my experience. I just want to own it.
Yeah. Right.
It's so. In other words, it's got to work. Um,
Doesn't have to do anything.
and then so here now it closed below the VWAP, so I get out. I know it was an aggressive trade. I take a small loss. I'm out.
5 points.
That's $500 on a big gold. It's $50 on a micro. That's a great place to trade micros. I think it's
Yep.
one of the best places to trade. For
Yeah.
micros mean a lot. So here we go. Out. Take that small loss. But what happens here? And this is classic. We go right back and test. And VWAP has left the building with Elvis. Now, my risk is new highs, or once you got the VWAP, it's above. Let's see if it fails. And this was, this is an interesting, a great question. That's a hard trade to take on a close down.
This one.
Yeah,
Yeah, it's tough.
but you could sell it against there once again. What is that range against if it goes to the new highs
New highs would be 15 points, $1,500.
or 150 on? Okay, I'll
150 on a
take.
micro.
Yeah, I could take that. Or and if I sold that bar right there, I can't break the high of that bar.
Yeah, I was gonna say that's where my stop would be. I actually reviewed the house account trade that we took on Friday in the Nasdaq, and we had a very similar bar. Do you want to risk the entire, new highs? It might start getting expensive, right? You could trade micros, but even then, if you're trading micros, you're managing the risk in that account. Market structure wise, you don't. To me personally, you don't want to have a stop anywhere below VWAP because VWAP is kind of what validates the trade, right? If I take a short at these lows here and we're holding VWAP, I want to add to this if I can, right? So my stop should be at least somewhere above VWAP and maybe not right above it, right? I want to, at least use some market structure, thinking about what invalidates this trade idea. This trade idea is based on 30-minute opening range and VWAP leaving the range. So if price is still below both of those, then the trade's still valid. What invalidates this trade idea is price getting back into that opening range, right? So stop has to at least be there, right? And then, you know, we see what happened for the rest of the day. That VWAP gave. Go ahead, coach.
Bradley DC had a coach Paul. Do you typically switch sides if stopped out on the initial long? No, and I didn't get short. I
Hmm.
just and I will put this. I don't. I trade. I look for opportunity in 12 different places on a short term. This one, um, if I had bought that and took a small loss, I'm done. And if VWAP got out of that range, okay, I'd take a look again. I feel good I didn't buy it again.
Right.
That
That's a win. That's a win.
that's a win. Taking a small loss was a pretty big move. There are certain days, like I didn't. This happened in the middle of the night. I wasn't watching it that close. But if you're just trading gold, right? Yeah, I tried to buy it. I got new information. Now, where my weakness is, and I don't have the patience of Jay, I probably sell this after the first breakout. Now, I wait for a close. So on the first breakout, well, where did it close? It closed. Well, I can't. Yeah,
26,
and that's
26.72.6.
yeah. Well, the first time it broke out,
Oh, here you go. 74.5. 26.74.5.
74. So now I've lost whatever one, and it wasn't a big loss. That's why I love what VWAP. So now close above VWAP is my risk if I take it again, and I usually don't take it. So now I'm 74. It went up to and it closed above VWAP.
7 points. 70
I'm
bucks.
probably done at that point and regretting I the third time. Now, okay, depends on the size of your account. You've heard me say this. If you haven't, I will not lose more than 12% of my equity of my account. And this is something I think newer traders have to understand. This is why it can get destroyed in a day. You can't, let's think if you're running a business and you lose 50% of your working capital, your chances of survival are very small. If you can keep it to 12, 15, at the most 20, which I don't recommend, but you can recover from that. So if I'm doing a $50,000 combine, this is my first day, I'm going to limit my loss to the most $300. So first trade I lost what, 50? We say it was about $50. Now I'm up to 120 and I'm not feeling well, you know. But let's say I was really bad and it was 150. I can't lose more than 300. I'm limiting myself because it's about survival. Okay, I got out. It closes again underneath VWAP. Now, and that big candle, that's a tough trade to take. But sometimes the toughest trade to take is the best.
The best.
The next time we get under on that big candle, what is my risk again? So I can't risk more than 150 or I'm done for the day. Now that one worked out. Now there was still some heat, but it didn't close above the VWAP again, and I make a little bit of money on the day. Hope that if that makes sense. So yeah, if I'm just trading gold, I'm a gold trader. I'll take two sides of a market because that's all I'm trading. So, but with that, I'm limiting my risk. Total loss for the day at 300. When I do that, I can get consistency. And then when I get on a run, I can add, and I don't have to stay at 300. If I double my account, it's now 600.
Right.
Adding
Yeah.
the winners in your account.
It's a great point. Uh, we got about 5 minutes left, Coach, and I want to get to a point that we talked about a little bit prior to getting on here. And I think what you just mentioned, knowing when to increase that risk and things like that is important. We can talk about crude oil. Crude oil is pretty choppy action. I did not look at crude very much today. If we look at here's our 30-minute open. pretty wide opening range. We can see view up
Oh my
never left that
God.
range for the entire day. Range bound market traded as one until that pattern breaks. The extremes of that range, did get extended. So you do want to, have some decent risk management in here. But again, I would try not to enter anywhere near VWAP on, a market that has not chosen a direction, because that's, likely where you get chopped up. Blake Roberts says, "So glad I tuned in." Blake, we are glad that you are here with us. And if you haven't done so already, go ahead and hit that like button. If you like what we're doing here. If you don't, just stay for a little while. You might hear something you like. Crude oil
Hit the
kind of
like
chopped.
button anyway.
Crude oil kind of chopped around today. Not much as far as opportunity for my own trading, but again, range bound markets. This is exactly where I want to see. We didn't volume never left that opening 30-minute print, coach. Price did, but when price leaves and volume doesn't, that's an opportunity to take that reversion trade. Uh, just have to identify where the extremes of that range are.
That's a good. That leads to a great question. Moody Marcus, Coach Jay, could you please go over how you measure IB, initial balance?
Yep. So the initial
And
balance. Go ahead, coach.
and this is a great example about determining a reversion day
Yep.
using initial balance.
For sure. So the initial balance is technically the first hour of trade in any market, right? So the New York session, uh, equity markets, right? The Nasdaq, the initial balance is going to be 8:30 Central to 9:30 Central. Um, I do use and that comes from market profile. I do look at the initial balance, but personally, I would rather look at some of the ranges that we are talking about here, right? This 30-minute Globex open. But the initial balance is the first hour of trade in the market once it opens. So if I go to the Nasdaq, the initial balance is going to be the Nasdaq opens at 8:30 Central. So the initial balance is going to be the first two 30-minute candles, high to low range, right? That's our initial balance here, 20,128 up to 20,264. If we look at the Globex 30-minute range, which is when trade opens up again, let's look at where somewhere in the middle of both. But I personally like this 30-minute opening range a little bit better than the traditional initial balance.
Yeah, so it's the initial balance is the first half an hour's range. Um, and um, in every market. So know what when it opens, measure the first hour. That's the range. If it's going to be a trend day, and this might sound simple, but it is. If it's going to be a trend day, it has to break out of that.
Yep,
As long as it's in it, you've got a high probability that it's just going to rotate inside of it.
100%. So we got about a minute left, Coach. We did talk about it being Q4. Uh, I'm doing a countdown. You can see it up here in the name of this account. Called it Q4, and I'm just counting down the days. There are 64 trading days left in 2024, uh, just over 3 months. So I think it's a good time to kind of review what happened with your trading for the year. And coach, the trading mentor I had, he used to hate when traders made uh, New Year's resolutions for their trading. Like, oh, at the beginning of next year, I'm going to be extremely profitable, right? It's like, why do that when you sit at your desk and day trade every day, right? So don't wait until 2025 to make any necessary changes to your trading. Understand that we have 64 days left. If things have not been going well, do a little bit of a review and see what you can change prior to getting into the new year, right? That new year motivation is going to wane 2 weeks into the year most of the time. So make the changes now. Coach was just talking about, uh, managing your risk and sizing up in your accounts, right? We have traders ask all the time, hey, when do I know when to scale up in my account? I think that should be a quarterly decision, if not a twice a year decision where you can trade the same size consistently. So your numbers are going to look the same consistently, right? If you if your size is fluctuating, you're not really trading based on a plan, you're trading kind of based on day to day. Review things over a longer period of time. So you can have actual data for your trading plan, and you have 64 days to the end of the year to kind of review, start implementing any changes that you want for the new year. Don't wait until 2025 to do so. Coach, you got anything before we go? Go ahead.
Yeah, just to add to that, there's a great trader, Ed Dakota, fund manager, a legend. He put it this way: you can only trade in the present. So in this case, if you said, well, I'm going to review it's the end of the quarter in 2025, my New Year's resolution, I'm going to get better. Well, in effect, you're putting off a decision into the future, a future you don't live in. And and you can't change the past. So all we have is the present. That's it. So end of the quarter, end of the week, end of the day, that's when it starts. If you're going to put off getting better or doing something, you're just doing that. So in the present, following a plan, executing the plan is the most important thing. And you there's going to be losing days. And I think this is every losing day, well, I got to do something different. Well, but if you didn't follow a plan, right, and you had a losing day, that's what you have to go back and go, no, that wasn't part of the plan. I just didn't want to take the loss. And that right there is probably more than half of the problem with traders, because it's hard to be consistent. So every day, be in the present. If you're disappointed in your results, okay, maybe take a few days off and go back. You have the results and you have your trades. Go back and measure that. If you don't have a plan, and then most likely you have to be in the 1% club.
Yeah.
So develop a plan, execute the plan. At the top of the hierarchy of the plan is risk management, preserving the account. Then you can get consistency. So don't wait for the end of the year. Start on any day that ends in Y.
There you go. There you go. And if part of your plan is getting on Topstep TV to pass with the pros, you're going to need to fill out the document that I just put in the chat. If you want to get on Topstep TV and trade your trading combine and pass it on live TV, feel what it's like to trade in front of 3,000, 4,000 people, 5,000 watching sometimes. Fill that out. Dolby is reading those submissions, so make sure you fill out exactly what they're looking for there. The team's going to reach out to you. We already had Stanley on. We had Keegan today. I believe we have Steven tomorrow, but the next one could be you. If you want to trade on Topstep TV, go ahead and fill that out. Lots of pressure for a newbie. Yeah, it's pressure, but that's
Bring the
why we're doing it.
pressure.
That's why we're doing
Face
it.
it.
Yeah. Honestly, I think if anyone wants to try it, I would be the first one to say, if you're confident in your trading strategy and you want to test that confidence, sign up and do it, right? Who cares what the results are going to be? Don't worry about how your trades are going to end up, but it's a great place to kind of uh, talk through your trading plan and what you're looking for. A shout out to Stanley again for doing it, and Keegan as well. Having a trading plan, trading it, and regardless of the results, sticking to their plans on that segment. So if you want to be the next one to pass with the pros, make sure you fill out that link. And that's it for us here. Remember, Coach Hoop, Coach Ray, Coach Vince are always doing classes in Discord. So make sure you check those out. Coach Hoop, I believe, is going right after us. And then Coach Ray at 6 p.m., Coach Vince at 7 p.m., and then, of course, Coach Dakota at 7:30 p.m. Central Time on YouTube. And we have Deanna with the London Open, 3:30 a.m. Central Time every day. All right.
All
So
right.
thank you, everyone. Thank you, Coach.
Thank you.
We will talk to you all tomorrow. Trade well. Coach, are you on
All
Topstep
right.
TV tomorrow?
11 o'clock. Yes.
Make sure you check that out.
All right.
Thanks, everyone. Bye.